Good morning and welcome. This is NDTV Profit. My name is Mathew and you're watching All You Need to Know. With me is Smriti, Chaudhary, and we'll take you through the next half an hour or so of trade. Take a look at the markets and see where they're trading right now. You have the Nifty 50 that's at 24,580 and up about 0.33%. Not too much to speak of. A little bit of chop and churn, but gains nonetheless. And you have a little bit of action in the IT index, which we'll talk about in just a bit. But let's talk about the broader markets first. And you have the mid-cap index that is gaining about 0.33%. Similar gains for the small-cap index. All told, it's an okay sort of a picture for the Indian equity markets at the start of the new week. Let's talk about the sectors then. And I mentioned IT. It was up and about in trade at the start, but has given up a little bit of that ground. It was a top performer, remember, on Friday. And what gains those were, it's up as much as 0.4% right now. HCL Tech, of course, one of the stocks in focus. The top gainers today are in the form of the Nifty PSU banking index as well as Pharma. Quite a lot of news in the pharma space. And that pack as a whole is up about 1.2%. Auto as a pack doing reasonably well as well, up about 1% or thereabouts. But there is one stock that we're focusing on. It's not a big mover, Zomato. Let's see where the stock is currently trading. It is up about 2.3% or thereabouts, and it is trading at very close to the 230 mark. But there is a significant update from the perspective of earnings going forward, and that is that the company has decided to increase its platform fee, and this is something that the competition is doing as well. We've got Rishabh Bhatnagar joining in to tell you about this latest development and why the company decided to do this. Rishabh, what are you picking up?
Right, so food delivery giants Zomato and Swiggy have sort of teased and hiked their platform fees across various key markets. Now, across Delhi, NCR, Bangalore and Mumbai, which are the top three markets in the country, Zomato has hiked its fee to about 6 rupees per order from the earlier 5 rupees per order. That's about a 20% hike. And in other key markets, Swiggy has hiked and rather teased a 7 rupee fee, which it currently shows discounted to rupees 5 per order. Now, this is again in line with the growing quest for profitability. We've seen Zomato grow leaps and bounds over the last 4 quarters. We're seeing Swiggy head for an IPO, so obviously it wants to head for improved profitability metrics. And a key factor of that is that mandatory platform fee. Now, platform fee, for those who haven't heard of the term before, is a flat fee that is charged by these platforms that is separate from the GST, from the restaurant charges, the handling charges, and the other sort of miscellaneous terms that are levied when you order food from online delivery platforms. In fact, in its March quarter letter, Zomato had also stated that one of the key reasons for their improved profitability and improving margins is the introduction of the platform fee. Platform fee has been used as a tool for sort of having that sort of boost to the top line. If you look at the number of orders that they do, Zomato being a listed entity, we have the number. In FY23, they did about 65 crore orders. Now, on these 65 crore orders, if you levy a platform fee that is increment of 1 rupee, that is an additional 65 crores to its top line across the year, which is a pretty big number. So an interesting trend. Analysts have predicted platform fees to increase as we go ahead. So there is more room for growth here.
Right. Thank you so much, Rishabh, for that. Let's talk about it with our guests for today, which is Sameer Dalal of Natwarlal and Son Stockbrokers, along with Rajesh Palvia, SVP Technical and Derivative Research at Axis Securities. Welcome to both of you, and thanks for joining in. Sameer, coming straight to you on Zomato, an interesting play. Even stock-wise, we've seen massive gains in the last 1 year, but this increase in platform fee, this seems to come every couple of months, a rupee of an increase that happens. And brokerages seem to believe that this is going to be one of the biggest levers for the growth. Now, looking at maybe Swiggy also hitting the bourses, there's a certain premium that Zomato currently enjoys, being only player in the segment in the listed markets. How are you seeing this play out? Do you still feel Zomato is a good buy at this juncture, considering the valuations as well?
Yeah, so first let's talk about each point separately. Let's talk about the fact that they've increased their platform fee. I think the 5 rupees to 6 rupees, the 1 rupee increase is great for Zomato because the sheer number of size of the orders that they get. So for them, like your analyst had worked out, it's almost like a 50 to 60 crore bump up in the revenue, which pretty much goes down to the profitability because there's no additional cost to that. So definitely going to help on the profitability front for Zomato. Now, the second thing, if you ask me, I think the growth opportunity yet for the delivery players, is, Swiggy and Zomato, is extremely large because yet, if you ask me, the number of orders that are there, the kind of reach that they've got can only keep increasing over time. So as that keeps happening, we believe that the turnover and the profitability for Zomato will continue to increase. So we are bullish on the business of Zomato. We believe even Blinkit, which is the delivery of goods, which is your consumer goods, is also going to continue to see an uptick, and that will lead to further profitability increase for Zomato. The problem where it lies is the fact what you said right at the beginning of your talk, that the stock has seen a massive run up, and because of which the valuations have expanded quite drastically. Now, yes, I agree. It's a platform-based business where investment in capital is limited. It's just to grow. It can continue to grow. But even for them to, for someone who invests today at the current price, the returns for the next 2 years are going to be a bit muted, because even if when the profitability increases, it's difficult to increase the valuation multiples from here. I agree we are in a liquidity-driven market and valuations can keep moving up, but valuation moving up means the stock becomes more dangerous, if you ask me, for an investor. So I would say Zomato is a great investment from a 5-year point of view, where returns could be good. But given the fact that we believe markets could correct anytime over the next 1 year, there's a very strong probability and possibility that Zomato too, like the rest of the market, will correct. And that, if it comes around the 160 to 180 region, that would be a great buying opportunity for a 5-year period. So we are bullish on the business. We do not worry about this 1 rupee increase. I don't think people are going to stop ordering because of that, but that is going to help the profitability. And where we find the little bit of hitch is valuation. So correction in valuation, go ahead and buy.
Fair point. That's an interesting take on Zomato. Let's jump straight into the questions. And by the way, since I didn't mention it already, that number that you see on your screen, the WhatsApp number, that's where you send your questions to us. And we've got several that have come through already. Just if you've sent this message for the first time, then make sure that you tell us your name as well as where you're tuning in from. And that'll help you identify when we take your query. The first one we're taking is from Kalyan Chakravarti, and he's asking about Jubilant Food. He's holding at levels of 686, which is elevated. The stock is currently trading at 576 or thereabouts. Rajesh, on the charts, what should the strategy be?
So, Alex, if we look at the structure for Jubilant Food, stock is showing some bit of recovery from its recent low. But looking at the structure, still we feel that there is a supply pressure which is placed at the current market price. So I think if stocks manages to cross above 600 kind of zone, then only we may see some short covering action, and then we can see some more upside towards 640, 660 zone. Stock is still underperforming stock, and looking at the near term short term structure, 590 to 600 is a supply zone for this pullback. So I think if he has a time for another 6 to 8 months, then he can hold the position, because we believe that this stock may take time to recover to its purchase price, because it's very far from the current market price. On the downside, we would advise to keep a strict stop loss of 550 if we wish to hold the position for next 6 to 8 months.
All right. The next counter is Motherson, Samardhan Motherson. Now, the question is from Rajat, who's writing in from Lucknow. They want to know if what's the current outlook for the stock? It's currently trading at around 200 rupees, up about 2% in trade right now. Sameer, coming to you on this one from a longer term perspective, do you have a price target on this? The results, I mean, the last results that we saw for the company were exceptional.
Yeah, so the company continues to do well, and Motherson is one of the companies that focuses on growing extremely fast, even if it means growing through acquisition mode, and they've actually done that strategy quite well over a period of time. We believe with the change towards the electric vehicle, the kind of products that they cater to the wiring segment will continue to do well, and that will allow them to grow their top line and their profitability over a period of time. But again, the stock has seen a significant run-up. If you go back a month and a half, I think it was around 140. And if you go back about 3 months, the stock was at about 90 rupees. So you've seen the stock almost doubling over 3 to 4 month period. So given the fact that valuations have moved up quite significantly, I think there is an opportunity on a longer term. Again, similar story as Zomato. Growth is good, everything is good, but valuations discomfort. In this market, a fundamental analyst finds a lot of things expensive to buy, and Motherson fits that bill. I would wait for corrections to get in, but at this point, no, I would not look to buy.
Okay, fair point. All right. I mean, I've asked so many people about this. Where do you see the markets going, and how far will it go? There's absolutely no answer, and who's going to take that call, right? The question is, do you buy? And the answer right now, at least for this company, is no. The next one is Bank of Maharashtra. Vamsi is asking this question. She's tuning in from Bengaluru, and she's bought at levels of 54, and she's got significant quantity also, 1,500 shares. Sameer, on the fundamentals, coming back to you, would you say too expensive? Would you agree with that? It's not too expensive in the context of what we're seeing across the board, but would you place your bet on this company per se, this bank, or are there better bets?
So PSU banking is actually quite attractive compared to a lot of the other spaces where, I mean, other banks, if you look at it, they're still trading at one-time book. Bank of Maharashtra particularly don't have coverage on, but yes, we are interested in PSU banks. And the one that we have been telling people to invest in, and we ourselves have, I would like to put that as a disclaimer, is Bank of Baroda. Yes, the stock has moved up, but I think given the fact that it's trading at only 1.1 time book, it's a good dividend paying company. The pain points for them is over, where the NPAs have come off, where now we are going to see them being able to grow their book. We believe that they could do well over a period of time. In the near term, short term, probably what's happening is the fact that money is flowing into equity markets quite significantly. The bank deposits are not growing as much. But once we see the deposit, we see the economy kicking off, we see loan growth picking up, we will see the deposits also starting to see an uptick. And that's when these banks will start performing a little better. So Bank of Baroda is our top pick when it comes to valuation front, growth front. SBI looks good. Canara Bank is an interesting one. Bank of Maharashtra per se, I don't have active coverage, but it's part of the entire PSU basket. And I think the PSU banking can do well over a period of time. So if you are invested, you can stay put. If not, look at Bank of Baroda. I think that's more interesting.
All right, interesting. The next counter is Oberoi Realty. The question is from Sameer. They bought the counter at a price of 1,849. Rajesh, elevated levels for Oberoi Realty. It's been in a bit of a downturn. It's lost about 10% in the last 1 month or so. What's your view from a short to medium term, and is there a target that you have?
So long-term structure for Oberoi Realty is on the bullish side, but since last 4 or 5 weeks, stock is witnessing some profit taking from higher level. Stock now slipped below to its 20-day, 50-day moving average. But for short to medium term, stock is now trading near to its important support area of 1680, 1690 zone, which is very important for this short to medium term trend. If stocks continues to hold above 1680 level, there is a high possibility that stock may attract again buying interest from current level. And once the stock manages to cross above 1760, then I think we can see levels of 1900 also on the higher side. So though stock structure on the long term is on the bullish side, so I think he may hold the position. Stop loss can be placed at around 1670 to hold the long position. And I think in next couple of months, there is a high possibility that, again, stock will resume its uptrend, and then possibly he may get his rate, and maybe possible higher target towards 1950 to 2000 would be there for Oberoi Realty.
Okay, Martin from Dhanbad has got this next question. He's asking about IRFC, which he's bought at levels of 82.19. Let's see where the stock is currently trading, and it is quite significantly higher than his buy price. And this is one of those stocks that has absolutely rocketed this year. He's bought 724 shares of this counter. Would you suggest, Samir, getting money off the table for IRFC?
Absolutely. I think it makes sense to take some money off the table, right? Look, the bank is trading, the NBFC is trading at about 5 or 6 times its price to book. And if we look at any of these finance companies, they trade anywhere between a region of 2 to maybe 4. HDFC used to be at 4, 4.5, and of course it's come off. Now, I don't deny the fact that the financing for the railway space is going to see a huge uptick, given the fact that government impetus towards railways is going to be quite large. And, the opportunity for these Vande Bharat trains, for modernization, for all of those activities is going to ensure that growth for funding is always going to be there. But that funding can also come from banks, that can also come from different NBFCs. It doesn't have to be purely IRFC only. I think there are better opportunities in the NBFC space than IRFC. I think the PSU banks make more sense. We discussed earlier Bank of Baroda. I would take money off the table and maybe move to a PSU bank and play the next leg of the rally that could happen over the next year in the financing space.
All right, we'll slip into a short break now. We'll be back and we'll take more questions on the other side. Stay tuned. Welcome back. You're tuned in to Ask Profit on NDTV Profit. We were in the middle of taking queries, and the next one is on Paytm. The question is from Naman, who's writing in from Delhi. The question is, this is a long-term outlook that he's seeking on Paytm. Samir, this is from a period of 5 to 10 years. Now, we've seen a lot of news flow around the counter. The counter has tread its lows after that, and we're still kind of unclear on how the story will play out from a 10-year perspective. What would you suggest somebody who's holding the stock or is interested in buying the stock to do?
So honestly, even for me, a 10-year perspective is difficult to give because these are the businesses that change quite fast and then regulatory compliances come in. Simply put, Paytm was starting to grow its profitability quite significantly and the stock had started re-rating upwards. And then you had the RBI come in and say Paytm payment bank is not in compliance, and because of which we had the fiasco. Now, if I were to just look at the business for the time being, the way I see it, it's going to take a lot longer for them to reach break even and to reach profitability. So what was probably initially probably 4 quarters is now going to be 8 quarters or 9 quarters. I'm not denying the fact that their business model is strong and they are going to come to profits, but it need not be anytime soon, given that they face these regulatory issues. So yes, for someone who wants to stay invested and doesn't mind for a 10-year period, I think this is a good counter to be invested in. But be assured that you will find volatility in the counter. You will see sudden spikes and sudden drops as regulatory comes into play and affects them. But given the business model, how they're trying to grow their, the loan book through the buy now, pay later, through ticketing, through these various other platform kind of models. As those start gaining scale and start churning in a better amount of revenue, I think there will be people who will look into the stock and try to re-rate it. So stay invested for the time being. Expect volatility, but keep an eye on it, because if something changes negatively from the regulator, then it might make sense to get out quickly, because then the period to get to profit will be a lot longer than already it's extended period.
That's a fair point. Very quick view on the technicals, Rajesh. Up about 10.4% or thereabouts from the low point, I think, over the last month or so. Is there a positive trend here?
So some recovery is taking place in Paytm, but still, if we analyze the longer term structure, it's still in the bearish zone. But on the near term, yes, there could be some possibility of up move towards 500 to 520, where one can again review it or can book partial profit if you have bought at lower level.
All right, let's take Anshula's question, and this is for you, Samir. Very quickly though, not getting into too many details. You've already talked about Bank of Baroda, but she's looking at 5 stocks. You don't necessarily need to talk about 5 stocks, but what can you buy right now on the fundamentals? She's got a budget of 3 lakhs that she can use.
So, last week we gave 3 stocks. We gave BL Kashyap as one of the buying opportunities. It's in a real estate construction activity business. We think that is an interesting play. In the banking space, of course, though PSU banks is what we talk about, Bank of Baroda, I would look at IDFC First Bank in the private banking space. I think that is something that looks very interesting. I'd also talked about the fact that we like Indiabulls Housing Finance. I think it's trading at under book value, and the growth opportunity for them is quite strong. It's got new promoters, and the new promoters are private equity, which will eventually be professionalizing the business, which has already happened. And that I think will do well. There's another one which we had recommended was the Indiabulls Housing. Now it's under the Embassy brand. The name has also been changed to Equinox. We believe that they have a great rental business revenue coming through, and also the fact that the projects that are coming to the end will start leading to revenue uptake. So that is another counter that we like. And then in the auto space, I mean, you can look at something like Tata Motors also. I believe the stock has run up a bit, but on corrections, I think the stock looks attractive. The growth opportunity for the private vehicle business as well as the truck business is going to, commercial vehicle business is going to do well. So Tata Motors is another counter that they can look to invest in.
All right. The next counter is Shipping Corporation of India Land and Assets. Rajesh, I'm sure you won't have a lot of data on this, but this is from a 6 to 12 month perspective for somebody who bought it at 67 rupees. They may have gotten it. They bought it at a price of 67. So this is not the demerged price. Is there something that you can tell us based on the charts?
So it's in uptrend. Stock is almost trading near to its all-time high trajectory. The way stock is showing structure on a near-term, short-term, we believe that till stock is holding above 90 level, there is a high possibility that we can see furthermore higher level. 120 to 130 could be the next target going forward. So I think he may trail stop loss towards 90 and hold the position, as structure is still on the bullish side. There is no sign of a reversal at this moment.
Okay, fair point. All right, that's the view on the demerged entity, as you probably know, of Shipping Corporation of India. We've got Prasad from Bengaluru, who's asking about ONGC. He's got 1,500, which he's bought at levels of 281.2. The stock is currently trading above his buy price. And so, Rajesh, he's asking, based on the price trajectory, what should his strategy be? The stock is up and about today, up about 2.5%.
Yeah, and we are holding our bullish view for ONGC. We have recommended this stock on a positional perspective to our clients also. And the way the long built-up is there on series, and the stock managed to do breakout on the weekly chart, stock almost trading at all-time high trajectory. So we believe that this momentum can extend further, and possible positional target for ONGC we can see towards the 345 to 355 also. So he may hold on the position. Even at the current juncture, if anybody wants to buy, can buy at current level also with stop loss of 305.
Okay.
Rajesh, a quick view on Nifty Bank. This is a question from Subhajit, who's writing in from West Bengal. What are the key levels that you should watch out for?
So 52,000 is the key level at this moment, and if it slips below to 52,000, then there could be another round of supply pressure towards 51,800. That's the next major put-based concentration. Though Bank Nifty is still volatile in the nature at this moment, until the Bank Nifty not crosses above 52,600, it may remain under consolidation. 51,800 to 52,600 could be the possible range for some couple of days. Either side breakout or breakdown will decide the major direction for the Bank Nifty. So for intraday trade of 52,000 on Bank Nifty spot would be the key level to watch for. Try to buy around those level only with stop loss of 51,800.
Got it. All right. Thanks so much, Rajesh, as well as Samir, for joining in, for taking all the time that you did. That brings us to the end of this particular edition of Ask Profit. It's been a pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.
Hello and welcome back to NDTV Profit. You're watching Hot Money and this is Mihika Barve. But before we go on to the themes that we do have in focus for you today, let's just take a look at how markets are faring in trade. Well, we have the Nifty 50 up 0.4%, and when you look at the advance to decline ratio, we have 36 stocks in the positive and 12 stocks now declining. When you look at the top Nifty 50 gainers, we have stocks from the oil and gas and energy pack, where we have counters like NTPC and ONGC, both up 2.5% in trade today, as well as Bajaj Auto and Shriram Finance that have seen some good stock movement. When you talk about the stocks that aren't doing so well, we have Grasim Industries as well as Asian Paints, both the counters under pressure, and as well as Tata Steel and LTI Mindtree. When you look at the broader markets, the Nifty mid cap up 0.33% in trade today, 0.33% in trade today, but the Nifty small cap 250 that is clearly outperforming the benchmark, up 0.41% in trade. And the counters that are contributing to the positive movement, we have Godrej Phillips, which is up 16% in trade today, as well as Tanla Platforms and HBL Power Systems, both up 7 to 9% in trade, as well as stocks like MMTC, Vardhaman Textile and Root Mobiles that have seen some significant stock movements. The stocks or counters that aren't doing so well, we have Brigade Industries as well as Railtel. We also have Welspun Corp that is not doing so well. When you look at the sectoral gainers, and you know what, let's just bring up the Nifty 50 heat map on screen, and just talk about where you can see those kind of counters. Well, like you see, mostly green across the board. Like I said, oil and gas and energy companies at the top, ONGC, NTPC, as well as some auto numbers like auto counters like Bajaj Auto. And when you look at the stocks that aren't doing so well and have some negative bias, we do have counters like ICICI Bank, Reliance Industries, JSW Steel, and Axis Bank not doing so well in today day of trade. Stocks that are fairly flat is counters like L&T and Tech Mahindra, as well as HDFC Bank right now, kind of moving between the positive and negative stock movement. When you talk about the sectoral gainers, however, we have the Nifty PSU Bank and the Nifty Healthcare Index, as well as the Nifty Pharma Index, which is the top gainer in trade today. We have the Nifty PSU Bank up 1.7% in trade today, as well as Nifty Pharma, which is up 1.3% in trade today. And all the sectors are in the green today, but we have Nifty Bank and Nifty Metal that have lower gains compared to the other counters, but up 0.2% in trade as well. When we look, let's just bring up the Nifty oil and gas in focus for trade. We have Reliance Industries, which is the only counter which is in the red today, and as well, it is the top point contributor on the Nifty 50. But the counters that are doing well are gas companies like Mahanagar Gas, which is the top Nifty oil and gas gainer in trade today, as well as GAIL India and Petronet LNG. We also have Castrol and ONGC, and it's on the back of speculation, potential media reports that have stated that the inclusion of natural gas under the GST regime is well on the go. When you look at, the counters that we do or the themes that we do have in focus today, okay, before we go on, we have the WPI data that is coming through. The June inflation is at 3.6%, as you can see on the bottom of your screen currently. The June WPI inflation is at 8.68% versus 7.4% in May. When you talk about the primary article inflation, it's at 8.8% versus 7.2% in May. And when you talk about the June WPI for fuel and power inflation, it was at 1.03%, slightly lower than what we had in May. And when you look at the manufacturing product inflation, it's higher at 1.43%. And when you look at the WPI inflation on a whole, it's at a 16-month high as of the latest data as of June of 2024, and this is the food inflation is at 8.68% versus 7.4% in May of 2024, and we have other aspects of that are coming in. We have the primary articles inflation that is seen an uptick, as well as the manufacturing product inflation that has seen an uptick at 1.43%, and we'll also be getting more insight on the same. And we will have Pallavi joining us in a short amount of time. But just when you look at how the markets are reacting as the inflation numbers and data come in, let's just pull up the Nifty 50. It's up 0.3%. Not much of a change to what it was at the start of the show, but it's in the green nonetheless. We have counters like NTPC, ONGC, and Bajaj Auto still gaining in trade today. We also have Shriram Finance, SBI, Dr. Reddy's, as well as Ultratech Cement that are up in trade. The counters that aren't doing so well, Grasim Industries, Asian Paints, Tata Steel, LTI Mindtree, Axis Bank, and JSW Steel. Now let's just kind of address the Nifty mid-cap 150 and talk about how stocks are moving in that index. We have Aurobindo Pharma, which is up 6% in trade today, as well as Oracle Financials and Alchem Laboratories, both up 4.5% in trade today, as well as Apollo Tires, and this is the whole tire pack in focus that we have. But with the WPI June inflation numbers coming in, we have Pallavi joining us to kind of give us a more detailed outlook on these numbers. Pallavi, how are the numbers looking?
Right. So as we can see on our screens, the WPI inflation figure for the month has come in at a 16-month high. Now, just to put it in some perspective, this is not entirely on unexpected lines. We had seen WPI inflation remain in contraction for the longest time. It was we were actually seeing deflation on the wholesale prices front for a substantial period last year, and now we can see that the index is normalizing gradually. This was largely driven by commodity price decline that we've seen last year. After that, we have seen some increase, and from a market's perspective, the increase in WPI because of the rise in commodities is expected to seep into the margins of companies as well as at some point. Retail inflation data had also come out last week. Even in case of retail inflation, the figures had come in at a 4-month high, and this was largely led by the rise in vegetable prices because of the prolonged impact of heat waves as well as the late onset of the southwest monsoons. So in case of the WPI as well, we can see some of that impact kicking in. WPI June food inflation has come in at 8.68% for the month of June. That's compared to a print of 7.4% in May. June WPI primary articles inflation too rose and it came in at 8.8% versus 7.2% that we had seen in May. Manufactured products, that actually forms the largest component of the index, also saw a rise coming in at 1.4% versus a figure of 0.78% in May. We have Madan Sabnavis, Chief Economist from Bank of Baroda, online with us. Sir, thank you so much for taking time out for us.
Yeah, thank you, Pallavi.
So I do want to start off by asking, what are your quick thoughts on the headline figures that are coming in? The WPI inflation figure has come in at a 16-month high. Was this largely among expected lines, and what is the trajectory expected to be going forward?
So in fact, for us, it was more or less on expected lines. We had a forecast of 3.7%, and the major reason is that the prices of food items have been moving up in the last few months and have remained high, something which has also gotten reflected in the CPI numbers which came out last week. So I think it's the same trend which we are seeing and the same trend which is going to persist in the next couple of months. And given the fact that what you had mentioned, that we've had this low base effect where the numbers were very low last year, I think we could see this number going up. Now, this would also mean that there would be more pricing pressures from the point of view of input costs, especially for the food processing industry. And that is why I think that is something which could again feed into the overall CPI inflation. So we also saw CPI inflation had a very high inflation for food products, above 8%. And that's something which is going to continue to persist, not just in terms of the primary products where prices are going up, like of onion, potatoes, and tomatoes, but also of processed foods.
Okay, now I do want to ask you how much of the price rise going forward as well is likely to be driven by vegetables or the food component, and how much of it in the WPI index is also because of the price rise we've been seeing across commodities?
No, I think the main thing is going to come from all the food commodities. Vegetables is, of course, we have seen the highest increase which has taken place in terms of the prices. But if we're looking at things like cereals, looking at something like pulses, I think until we have the next season coming in, the next harvest, which will come in the month of October, I think that the so-called kharif crops, or what we call crops, I think that inflation will continue to remain high until October, because the stocks are getting depleted. They were produced last year, and as we come to the end of the cropping year, there will be a tendency for prices to increase. Vegetables typically would be more seasonal in nature. It's more temporary. So until the next crop, which we're expecting from August onwards, which would be coming in, there should be some respite coming in for those commodities. Okay. But again, if you look at things like spices, I think the prices, it has a very low weight in the index, but the price increase has been quite phenomenal in the last 1 year because of lower production.
Okay, all right. Is this then, since the current print might be partly on account of the rise in food prices, is this expected to ease going forward, considering that we do expect prices to come off, like you said, once fresh arrivals hit the markets, maybe sometime around September?
See, the thing is, the prices would definitely move downwards, but given this base effect, I think the inflation number, the WPI headline inflation number, will continue to be at an elevated level. I don't see it going back to the levels of 1-2% which we had earlier. It's more likely to prevail in this region of 3-4% for a prolonged period of time.
Okay. Now, one last question before we can let you go. Looking at commodity prices as well, is there any impact we expect on margins of companies going forward, especially given that last year a lot of companies did see relief on that front and did benefit from lower commodity prices? That's clearly something that is expected to change this fiscal.
No, I think that is going to happen because there's going to be a secondary impact. So when I spoke about processed foods prices going up, I think that's kind of adjustment which will be made by companies. And we would be seeing the second round of inflation coming in. A number of companies actually held back on their price increases last year because they knew that the headline inflation was already high and the affordability issue was always there. But today, when you're seeing that your input costs are going up, it's very unlikely that this cost will not be passed on. But the whole question is whether it will be done immediately or whether it will be done in the next quarter. So I think I would expect that in the second and third quarters, there would be a tendency for some part of this price rise to get embedded, because even for some of the agricultural crops, like vegetable prices, will definitely return to the normal price. But when you look at things like cereals, you look at things like pulses, or even edible oils, of course, we don't have a problem with edible oils today, they normally tend to settle at a higher equilibrium, which means that the inherent cost, the basic cost, would tend to be higher. So I think there will definitely be a secondary round of price increase on the food front.
All right. Thank you so much, Mr. Sabnavis, for taking time out for us. Meka, back to you.
Yes, thank you, Pallavi, and Mr. Sabnavis to kind of give us an insight on the latest WPI data. But on that note, it's time for a quick break, and then we'll discuss the buzzing stocks on the other side. Do stay tuned to NDTV Profit. Welcome back. You're watching Hot Money. We now focus on the stocks that we do have buzzing in trade today, and we are joined by Sharmila Joshi for the same. We're going to discuss counters like Tanla Platforms, Ashok Leyland, and a host of pharma stocks. Good morning, Mrs. Joshi. Thank you for joining us. Yeah. So up first, we do have Tanla Platforms that is buzzing in trade since the start of today's day of trade. It's up 9% currently, and we have Rucha joining us on to give us the detailed outlook on why the stock is buzzing.
Thank you. So Tanla Platforms is buzzing in trade today. The company has signed a commercial agreement with a global tech major. The company has not revealed name of the client, but it is on the product which is offered by Tanla Platforms called as Wisely Anti-Phishing Program. Now, this is the product offered by the company to protect against SMS phishing. Now, this is to combat the scams on the messaging platform of the client by identifying fraudulent phone numbers. Now, Tanla is also expected to announce its first quarter results on 18th of July, and if we look at the stock performance of the company, we'll see that the company has performed very well in last 5 days, up around 10%, but has not really given good returns over the last 6 months, down about 12.5%, also down about 6% in last 1 year. So this is what we have on Tanla Platforms today.
Yes, thank you, Rucha, for giving us those details. Well, Shamira, I'll get back to you. Now, the stock has not seen significant gains in terms of stock performance. But in terms of outlook for the company, what are your initial views on the counter?
So, as we just heard that the results are on 18 July, so we are not too far away from numbers. I think let's take a look at the numbers, because I think this news somehow seems to be factored into the price, because the stock has been running up over these last 4 or 5 days. And overall, I think if you look at the valuations as well as the kind of returns they've given over the last year, as well as the business outlook, I think it makes a lot of sense to just wait for the numbers. Overall, I think, while I'm positive on mid-cap IT, I think that you need to be a little selective in choosing the stock, because you have to go with mid-caps with stocks where you're reasonably confident that going ahead, the outlook for that their main vertical looks good, because that's where the differentiation comes for mid caps. So from that aspect, maybe I'm a little neutral on Tanla, but the news development is certainly good. So I would think that it's best to really wait for numbers before you take a further call on the stock.
Yes, so a cautious, was fairly neutral take on Tanla Platforms. The next stock we do have in focus today is Ashok Leyland, and it's on the back of a order win. And we have Puneet joining us to give us some details on the order. Puneet?
Yeah, thanks for that. So it has received an order for roughly 2,100 buses from MSRTC. Now, this particular order is the single largest order that it's won from the Maharashtra State Transport Corporation, and they have been doing business with them in the past as well. When you look at MSRTC, currently they have roughly 15,000 buses on the roster, and they have been looking to expand this particular frame, and this particular order is right in that particular alley as well. Total consideration of the order is roughly 981 odd crores, and the timeline for this execution is between August of 2024 of this year until the next 12 to 15 odd months for this particular order. Of course, in Q1, the company already reported their monthly numbers, and they've sold roughly 6,800 odd buses specifically, which is up 49% compared to the same time last year. So this year has been, seen the demand revival of the bus segment, which was quite subdued over the last 2 years, specifically because of the pandemic, as well as lower demand for school buses as well, which is one of the key segments in India. The company has, of course, mentioned the big opportunity that they see in the EV bus segment as well. Currently, Ashok Leyland has a total order book of roughly 1,500 electric vehicle buses. Out of that, roughly 950 will be delivered to the state of Delhi, and roughly 320 are to be delivered this particular year to Bangalore as well. Finally, the total market share in the bus segment is roughly at 34%, and they haven't mentioned that apart from EV, they are testing newer technologies like hydrogen as well. But definitely this particular order confirms the particular guidance and growth guidance that they've given for this particular year of FY25 to grow much higher compared to the last year. Back to you.
Yes, thank you, Puneet, for giving us those details. Shamila, I'll come back to you on Ashok Leyland. What are your initial views?
So this is a stock that I like, and I think that what you must remember though is that over the last couple of years it has been through a sort of a restructuring mode where they cleaned up their balance sheet, etc. And I think a lot of the positives that are being spoken of now are the positives, are the reasons why I was positive on the stock for the longest time. And we have seen the stock move up from the 170 odd levels that it used to be to around 230, 35 levels, and then it's sort of consolidating at that level. Having said that, I think the fact that the company is seeing such a large intake of orders, as well as the EV segment, which was mentioned, I think I'm very positive going forward on that, because there is a huge opportunity there. And so overall, I'm positive on the stock. I think it is a stock for sort of longer term investors, given the fact that the price has moved up, and maybe for these new positives to reflect in the stock price, it could take time. But overall, net, this is a stock that I like.
Yes, okay. Thank you, Shamila, for those views. It's stock that Shamila does like as Ashok Leyland. But moving on, we have IREDA, which is the stock of the day today. Now, this multi-bagger hit fresh record highs today following its stellar first quarter earnings. Now, the CMD of IREDA, Pradeep Das, spoke with my colleague Harsh Satya and explained how the company's USP on sustaining asset quality will continue going forward. Do listen in.
Any lender or any project developer, if they do the project as well as project financing with discipline, asset quality is going to be guaranteed sustained. That is what we have proven in last 4 years. We are not allowing new NPA to come. We are addressing the old NPA to be addressed. See, despite that, any project financing, there should be some amount of risk. But how best you capture those early warning signals? As I said, every quarter we do our borrower's interaction. So we always connect to the borrower from the beginning of the problem. That is what probably generally is missing in other lenders. And that is our USP.
Well, that was IREDA's management for you. Sharmila, I'll get back to you. Your views on this counter, net profit up 30%, net NPA was down this quarter, and even the loan book and the loan sanctions have seen a growth on a year-on-year basis.
Yes, so I think when you look at a stock like this, I think one consideration has to be what was being spoken of and what you alluded to, that what is happening with the loan book and keeping a track of that. But I think on the positive side, you also need to consider the fact that a lot is happening on the renewable energy space, and some subsidies are expected from the PLI scheme, etc. And overall, we've seen in these last couple of years that sort of attention is being given to renewable energy as a source, and you are seeing various companies make inroads, initiatives in that regard. So I think that's where the positivity for the stock comes, because we have seen quite a large run-up in IRDA ever since it got listed, and overall I think that this is a sector and stock that I continue to stay positive on. Once again, I think the caveat here would be that perhaps the valuations are on the higher side, and when you buy, you do need to keep that at the back of your mind, that your investment horizon could be long.
Yes, that's a good point. Valuations have run up, but in terms of from a fundamental basis, it's positive for the stock, given the energy positivity in India. Up next, we have the Pharma pack, which is in focus, and we have several Pharma counters that have seen news runner buzzing on trade in the back of that. And we have Varsha joining us to give us what the new details are on the counter.
Well, thanks, Mika, for that. So, yes, Nifty Pharma is up almost 1.2% in trade today. Pharma shares have extended gains for second consecutive trading session, and the index have added over 1% in last two trading sessions. And if you see who are the contributors to Pharma's rally as of today, so Aurobindo Pharma is top contributor as companies considering buyback, wherein the board meeting is set to be on 18th July. We do have Alchem Lab and Natco Pharma, which are also contributing to this Pharma rally. If you see the other contributors, we do have Dr. Reddy's, which is up in trade today, but Lupin is also up in trade today as it receives EIR from US FDA for its Tabasa facility, and they've received no action indication classification, meaning there were no objectionable conditions found during the inspection. Also, we do have Cipla, which is contributing to the rally, wherein US FDA has classifies inspection at Kurkum facility as voluntary action indicated. That means objectionable conditions of practices were found during the inspection, but the authorities do not need to take any measures. All the voluntary measures will be taken by the company. So yeah, overall we can say that this is the Pharma Day today.
It was one indeed. Thank you, Aisha, for giving us those details. Sharmila, I also want to thank you for joining us today and giving us your outlook on the counters.
Thank you.
Yes. Well, on that note, viewers, that's all we have for the show today. But do stay tuned to NDTV Profit. Lots more lined up on the other side.
Welcome, you're watching NDTV Profit. I am Mahima Vajrajani. Well, today's focus is on Bikaji Foods International, and we're joined by Mr. Manoj Varma from Bikaji Foods, and he'll talk to us about